We had a great week. It was another kind of exciting week. We had some nice closes. We were trading the coin complex again, and we can see we're looking at IBIT here, which of course is Bitcoin, physical Bitcoin, the iShares product, and we can see that it's had a really big run since the Trump election, and we had a little bit of a dipsy doodle back up there. We dropped from the highs of yesterday morning, so we popped up to around 103,000. Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only on Bitcoin. And we pulled all the way back down into the 90s. And then overnight, Bitcoin actually hit 91,000. So from 103,000 down to 91,000. And of course, all the names in the coin complex, the Coinbases, the MSTRs, the miners, really pulled back, real pause there, and it was right back into them again. And I've been talking about this for a while, especially in the community, telling people, listen, I think that 100,000 level is going to be a bit like a magnet. We're going to move up above it. We're going to move below it. They're going to crush, they're going to, nail all the stops. And then it's going to rally right back. And that's exactly what's been going on. So I think we kind of sort of straddle that 100,000 level. And what that means to me is that implied volatility is probably a little bit high in some of these products in the short term. So when I look at things like MSTR, take a look at MSTR here. We can see that this stock had a really, really big pop. We had a long coin, a long MSTR structure, sold it literally on the open yesterday morning, nailed the top of it. It pulled all the way back into sort of the low 380s. So I think it was around 442 at that time. I think we got out at 440, pulled back into the low 380s. I didn't sell any more puts down there. It just kind of looked a little so-so, but I should have listened to myself saying that, listen, this thing's probably going to stick around 100,000, and these things are probably going to do something similar. MSTR probably going to stick around 400,000. And I thought, with the volatility still relatively high, let's look at the level down here. We can see implied volatility in blue. Yes, it's come down way, way down from those huge, huge levels. We're looking at 220 implied volatility. We've come all the way down into sort of the 145 range. I know we got as low as 117, 120 earlier in the week. And at that point, I was starting to tell people, listen, the opportunity might be in being long volatility. It didn't stay down there long enough for me to do anything, but here we are back up around 145 again. That's still a fairly high implied volatility. Not if you think Bitcoin's going to go to 120 or 130,000, or if Bitcoin's going to go back to 70,000, but I don't think so. My gut feeling is we're going to kind of stick around into January, maybe even towards the inauguration, and at some point Bitcoin will have a big move. Now, I could be wrong on that, but my play was a cash machine play. So I've got a section of the community where I do cash machine trades, and these are really, really focused on nice, juicy premiums and very, very high yields. So I'm going to show you what I did. I decided to go with coin instead of MSTR because I think MSTR, I don't mind trading it. We took off that great trade I mentioned yesterday, but in my view, it's a bit more of a powder keg, right? It's trading at 2.5 times the underlying value of the Bitcoin it holds. They've got this whole convertible business going on. I don't know. It could dry up a little bit. We're seeing volatility come down. And what the owners, what the buyers of the convertibles are doing is they're arbitraging the embedded call that's in there. So they're buying a call, a longer term call at a very low implied volatility. And they're hedging that out by selling out calls in the actual listed market. And so they're creating this incredibly juicy hedge. Now, if volatility stays down, I'm wondering if that's going to impact the appetite for more of these things, which may take some of the demand out of perhaps MSTR, maybe the coin complex in general. But I wanted to stay away from there. I'm going to go with maybe my go-to name, which is Coinbase, right? To me, Coinbase is kind of one of the picks and shovels stocks. I'm not focusing in on a miner that might mess things up or screw up in some way or issue a whole bunch of stock. I'm kind of going with a specific middleman that I think is going to benefit from the crypto world expanding and having more adoption, et cetera. And I think Coinbase is really in that very unique spot. Valuation, who the heck knows? It's all very, very expensive. But for me, it's an interesting name that if it did drop and this cash machine trade did not work out, it's a name that I can wrap my head around owning. Whereas if I get stuck owning MSTR, I'm a little uncomfortable with that. If Bitcoin goes back to 70,000 or worse, I don't know what MSTR could do. I mean, it could really, really, really just implode. That's just a guess. It's not a prediction, but I think it's got a huge drop potentially in it if it becomes unfavorable within the complex. So I don't want to get stuck with that. I don't want to sit on dead money for the next 5 years waiting for something to come back. I'd rather own something that's probably going to do okay as long as the coin sort of world proliferates. So in my view, those are two different things. So what I did was I went in at $330 this morning. I went in and bought the stock. I bought Coinbase at 330. It closed at 343 today, but I went in and bought stock at $331. So this was a little bit after the open, not far from the open. And what I did was I went in and sold the 320 calls. And at the time, I got $30 for them. So I paid 331 for the stock, and I sold the 320 call at $30. So what does that mean? Well, I got almost $20 of time value in that option, right? So I got some of that is intrinsic value. So $10, $11 of that was intrinsic value. And basically, the other $19 was time value. That's a lot of time value for 14 days. Look how much time left we have in these things. 14 days till the December expiry. So my bet is that maybe not a whole lot happens until December. And then at that point, I'm going to take another look again and see if there's another similar play. I know we've got some sort of late Decembers, early Januaries that we can play as well. And if it feels like Bitcoin just doesn't want to go anywhere and there's still a little bit of juicy vol out there to be harvested, I may do it. But I suspect if we don't do anything for the next 3 weeks, we're not going to see implied volatility anywhere near as high as it is. And then I'm going to start to look at potentially long volatility strategies in that kind of backdrop. But right now, I'm happy to grab that $19. Basically, if you divide that by your risk, so we go down to 301. So that's a 6.3% yield on this trade if Coinbase stays relatively stable. Now it's gone up to 343. That's great. I don't mind if this thing goes up. It can go up as far as it wants. I am going to still capture that time value because I'm short a call that is going to go up and up pretty much one for one as Coinbase continues to go up. Right now it's a 76 delta, but it's going to continue to go up and act like stock. The higher that delta is, the deeper we go in the money. That's fine because I'm long Coinbase. So think of these two as moving together. I'm short the call, which is hurting me. I'm long the stock, which is helping me. But in the end, they're going to be moving one for one. And the only difference is the time value is going to seep right out of that option, and I'm going to collect my $19. And I could just let myself get called away. I could cover the call. I could do different things near the end. But the whole point is I'm going to grab about 6.3% for 2 weeks work, which is, what do we got here? That's like, is that 160%? 6.3% times, yeah, 163%, right? Annualized. So that's a nice annualized yield. That's implying we do this every 2 weeks for the next year. That's entirely unrealistic, but people like to think of things in terms of an annualized rate. And that's what you're looking at here. So 6.3% for a couple weeks work, assuming that Coinbase doesn't drop below basically $301, right? It can drop below 320 because I've got that extra $20 basically of a cushion. So that's why I'm getting a little bit more of a hedge in here. What I'm really doing is I'm kind of selling, I'm doing kind of a covered call, but with that extra little bit of intrinsic value. I'm not getting as much time value as I would if I sold an at the money, but I'm grabbing a little bit of intrinsic value, which is turning this into what is really kind of a short put at the 320 level. So, but the way I like to look at it as is a kind of extra little bit of cushion, nice juicy time value, and we'll see how that bakes off. It doesn't mean that we necessarily have to sit on this the whole time. If I grab half of that $19, maybe I'll take this thing off and redeploy into some other trade that I think has a bit more potential. But for now, I'm kind of feeling this is pretty good. So we'll see what happens. Everyone have a great weekend. I'll try to do another update on the weekend, and we'll see you soon.